Hello, I am Wael Yahya, Certified Financial Technician Expert from the International Federation of Technical Analysts. In this video, we will apply the classical technical analysis methods to Carnival stock over the short term. But as usual, let us check the market structure or the stock major structure over the monthly chart. We can clearly see that we can consider the stock is moving within a giant trading range or a giant sideways. At some given time, you can consider that this was the trading range of Carnival. It was ranging from a monthly important support around 18 or $19, while the resistance was running around $54. Later on, there was a break to the upside that resulted later on in a major downtrend, as we will see over the weekly chart. So the most important thing to conclude from the monthly chart is that we do have a very important monthly resistance at around 19 or $18. This is very important. Another level, another critical important level over the long term is around $30. These two are considered very important, very long-term resistances. As you can see, after 2017, the trend changed and it was no longer sideways and it got stuck into a downtrend. Let us check this long-term downtrend over the weekly chart. It's clear we do have falling peaks, lower highs, as well as lower lows. This helped us to establish a very clear downtrend over the weekly chart, and here goes the down channel line. At some time it broke the channel line to the downside during the COVID pandemic, indicating huge and tremendous selling pressure. Later on, when it managed to return back above this channel line, this did never mean that the market structure changed. The downtrend continued over the daily chart, as we will see later on. So the major structure is bearish. The long-term picture is a major well-established downtrend, as we can see. And keep in mind, here it goes, the monthly resistances around the $30 mark, as well as the other monthly resistance around the $20 area. And you can notice that the stock is trading around $10, which means it is way far away from both resistances. Okay, the stock now is testing a very important level where it created a bottom in 2020, which was the place it managed to reflect again to the upside or bounce again to the upside after the pandemic in 2020. This level is very important. Weekly support around the $10 area. Okay, now let us check the short-term details over the daily chart. Here is our final medium to long-term downtrend. It's clear, connecting the highs, the falling highs, as we can see, as well as the channel line connecting the lower lows and parallel to the trend line. This is considered the daily falling downtrend. Of course, it's considered relatively medium term, and the short term or the very short term is also down. So how on earth could Carnival get into an uptrend, even if this uptrend is a short term against a downtrend which is prevailing from bigger time frames? Let us check this short term. Here you can see after the short term fall, after the impulsive wave, the stock started to create several bottoms around the $8 area, which is considered a short-term support, plus it was a very important weekly support as we have mentioned earlier. So it is clear that the stock Carnival is starting to drift sideways a little bit, and it is respecting the support zone ranging from 780 up to around $8.15 or $8.20, which makes it around 40-cent thickness area, and its volatility is relatively high, and this pattern or this formation is having a very clear resistance around the $11 area. If Carnival managed to break through this $11 barrier, I think the first station and the first target should be the $14 area. Why? Because this reversal pattern, if completed, its thickness was ranging from around $8 to $11, which means that this thickness is around $3 thick. Added to the place of or the level of break, this means that we are targeting $14 level as our first target and our minimum target. Later on, you can consider reaching the 16 level zone, and our final level over the long and medium terms is the resistance that we have talked about and mentioned earlier from the monthly chart around the $18 and the $19 zone. So if you calculate the distance between the price now, which is around $10, and the expected target around $19 or $18, this is of course an 80% rise. But wait for a second. There are very important conditions that should be met. First of all, during the required break above $11, we need an exceptional high volume. Exceptional high volume which should be double or triple the average volume. And we need 3 days close above the $11, and if it is a weekly close, it will be much better. During these confirmation days, volume should be decreasing to indicate that the sellers are not having the upper hand, and later on the reflection or the resume of the break to the upside should come over higher than average volume. These are very important conditions that should be met. Let me write them together with you. First, a break through the 11 barrier. Second, the break should be over very high exceptional volume. Third, 3 days close confirmation. And the fourth condition, that the days of confirmation should be over low or lower than average volume. If these four conditions are met, we can say that our short-term target is around $14 area, and our medium-term target is around $18 to $19 area, which of course is around 80% rise from the current market price. Final hint, final note, please take care that if the entry zone of any virtual trade is ranging between $11 to $12 area, the stop loss is around the $9 area, and the target is, the medium term target, as we have said, is $18. So we already had made some kind of sacrifice of a part of the journey before we get into the trade, or into this virtual trade. This means that out of the 80%, we sacrificed of around 25% of the move until we get our confirmation and until all the conditions required are met. So this means that the net profit expected is around 55% and not 80%, which is still a very good percentage on any virtual trade to be taken. Keep in mind, last note, if the stock did not manage to break above the $11 area, this means that the sideways drifting is continuous, and do not jump or expect the stock to do any positive scenario unless the 11 area is broken. If not, take care, it might break to the downside, and this break below the $8 support level is very bearish, and this pushes us to neglect the positive scenario that we have just been talking about. Instead, if the $8 is broken to the downside, more negative targets to the downside, which may reach the $4 or $5 zone over the medium and the long terms, and this is a 50% loss, maybe more. So please take care, do not get involved in this virtual trade unless $11 is broken to the upside with the 4 conditions required are met, as we have just explained. Thanks a lot for watching, and please feel free to like, share and subscribe, and see you soon.